You ever thought investing in real estate? Real estate investing is what I call money times three. You get paid in three ways. One, what we call appreciation, depreciation, and cash flow. Keep in mind when you're investing in real estate, it's really not about the purchase price. It's only about purchase price as far as what you can afford or what you want to invest. Because what you're investing in is a rate of return, what you're trying to do. Some people need tax deduction, some people want cash flow. Both will always lead to cash flow, but the cash flow will get greater if you're buying cash flow in the beginning versus just tax deductions. So there's all kinds of ways to invest in real estate. There's single family homes, townhomes, condos, Airbnb, that type of seasonal short-term rentals, which is seasonal is a little bit longer of time, not like an Airbnb is a couple of days, a seasonal is a month, 2 months. Certain areas have those opportunities, not all do. If you're just really thinking about it and you have a lot of time, single family homes are a good way to start out because you can do a lot of different things with a single family home, but they require to pay attention to a lot more, of course, yard maintenance and all the exterior maintenance. Where if you're somebody who doesn't have a lot of time on your hands, but you're looking to invest in real estate, what you really want to do is probably look at a townhome condo where you pay a HOA fee and they maintain the exterior of the property in a lot of these. You have to obviously read the rules and see what they cover, but a majority of them do cover all the exterior, roof, and that type of thing. So your time is really only taken as far as doing your own accounting and handling issues that may arise on the inside of the property. But again, it's less time because you're really only focused on the inside of the property, appliances and that type of thing breaking down. Now, with real estate, you can invest in an affluent area or a not so affluent area. Not so affluent areas give you a little bit higher rate of return versus an affluent area, give you a little lower rate of return, and you probably make a little more appreciation in an affluent area versus a non-affluent area. It just depends really what your flavor is, and there's a way to do it. You can do multifamily, you can do single family homes again. It just depends on how much time you have, how much you really want to invest into it, and what you're trying to do with it, a long-term, short-term. There are all kinds of different strategies. I've had people build portfolios and actually create like a small business, their own personal REIT. And I'm sure you've heard of the investing with some of the big companies that they do large REITs. Well, you can do your own, create 2 or 3 properties in one and with a little company underneath, which creates a business for you. And it's not something you have to monitor every day. You just have to obviously keep your eye out like you do on all investments and just tap on it and adjust it as you go down the road. If you're looking to look at different types of investments, we'll just talk about Wellington, Florida, an area that I'm very familiar with. We have a unique thing called the horse season. We're actually the horse capital of North America. We have the longest running horse show. So there's unique opportunities here that range from condos to single family homes, actually even to luxury homes, because there's all kinds of affluency that comes here and all the help that goes with the horse and everything else that goes with the horse sport. So if you'd like to do more of a short-term rental, which requires some attention only a certain amount of time of the year, and the rest of the time it's just maintaining the property as it's empty, it's a unique way to make larger chunks of money at one time versus having to monitor it year-round and do the accounting and all that. The nice thing about a seasonal rental, like an Airbnb, all the money is up front. The difference with the season is you get 2, 3, 4, or 5 months all at once. And then of course you have to monitor everything from there and pay any utilities and things like that that go along with renting for the season. As you know, Airbnb, you rent for a day or two, but again, all that money's up front. It's just smaller chunks of money versus an annual rental, which is you get paid every month and you have to monitor, monthly accounting and that type of thing. So there's 3 ways to do this with short-term, daily with Airbnb, short-term with seasonal, daily with Airbnb, or an annualized rental with a home that's rented year-round. And I say home, but you could do a townhome, condo, single family, luxury home, and all those opportunities are here. And even in Wellington, you can do Airbnbs here too, because not everybody comes for the entire horse season. Some people come for particular events or particular polo tournaments. So they're only here a few short days or 2 weeks, 3 weeks at a time. So there's incredible opportunity. Like I said, it's a way to make money times 3. Again, in case you're wondering, how do you make money times 3? It's your initial investment. Plus on that money, you get paid with depreciation, appreciation, and cash flow. If you'd like more detail, just please reach out. We'll be happy to provide any information you want. and drill down into any detail that you need.